All right. Good morning, ladies and gentlemen. Thank you for taking the time out of your busy diaries to join John and myself and having a bit of a discussion around a very hot topic over the last year or so called bank codes or bank statement analysis. Now, we all know, if you've been in credit as me and John, that bank codes have played a very prominent role in risk assessment over the years. Where did it come from? Who drives it? What does it mean? That have all changed a lot over the last couple of years. But now we've come to a situation where the suppliers of this information, which are your banks, have decided that they're no longer going to do that. 2 banks has already stopped. And what now? Where does it leave you as the grantor of credit with the lack or the hole that it's left in your world? Well, I've got good news for you. You don't have to worry. We at Inoxico have seen that problem and we have come up with a solution. And what is this solution? I'm going to discuss that solution with my friend John Rousseau here next to me, who's going to tell you what exactly it is that Inoxico has designed to help you with that hole that the banks are now leaving with bank codes. We're not just filling the hole, we're overfilling the hole because our product is far more superior than a normal standard bank code. So let's start talking about this. John, in a nutshell, bank codes, where do they come from? And why are they playing such a prominent role in our lives?
Yes, thanks, Martin. And thanks everybody for the time and for taking time out of your schedules to join us. We probably have a very strong credit management or credit-related contingent joining us on the line. And when you ask the question, where do bank codes come from? If you go back into many, many years of history, banks at one point in time used to write what they called full and general reports on their clients. That would give you a considerable amount of information on the customer. It would give you a view of their status and how the bank sees them as a potential client. And more often than not, that would also include a recommendation to do business with the client. And there was a lot of reliance placed on those full and general bank reports. If there had been dishonors on the account historically, that would be included. If there were affiliations with other larger businesses or holding companies, that sort of information would be contained in the full and general bank report. So obviously what happened over the years was that, and certainly, you know, in my days in banking some years back, full and general reports were pretty much in demand and pretty much requested on a regular basis. Obviously, these full and general reports took a lot of time to compile and to put together. The wording needed to be quite selective to convey the right communication about the company to the applicant who was applying for it. And over time, these full and general bank reports were replaced by a bank code system or bank code solution. And those of you on the line will obviously be familiar with the different types of bank codes. They range from an A all the way down to a G. Sometimes you get a code J, which refers to the fact that the bank account is invalid. And all it does is it gives you some indication around what the credit worthiness of that client looks like. A obviously would be a customer that's undoubted for the amount of your inquiry. And I think that's important because when banks give codes and when they used to give full and general reports, the codes speak to an amount of your inquiry and the terms of your inquiry. So if you're, by argument or by way of example, if you're applying for a bank code on company ABC Trading Pty Limited for 100,000 Rand over 30 days, the bank code speaks specifically to that company, that quantum of amount of credit that you're looking for, and that tenor, the 30-day tenor of credit that you're looking for. So they range from a bank code A all the way down to, as I said, you could in fact get a bank code to J, and they mean different things. So what banks are looking at the moment is they are going through a considerable process of trying to reduce their costs, trying to improve their process efficiencies. Those of you on the line that have requested bank codes will attest to the fact that they take a considerable amount of time to be returned from the bank. And whilst that period of waiting is taking place, you're not in a position to grant the credit or open the account or approve the facility. A lot of you may also be credit insured. And credit insurance, your policy will require you to obtain a favorable bank code on your client in order to activate the cover. So with banks obviously cutting back on their costs and trying to streamline their process, certain banks, and we're aware of 2 of them, have declined to give bank codes. And what this effectively means is that if you want to comply with your credit insurance policy, if you want to comply with your own internal credit policy and you need a bank code, you have now got to ask your client to obtain the bank code on your behalf. And again, that speaks to the delay and the timing that it takes. So I think that gives a bit of perspective on sort of the history of bank codes, the significance and the importance of bank codes in the granting of credit, the purpose of why we want bank codes and why we need them, why we use them, how they benefit us in terms of our credit approval process, and also speaks to the fact that they are time consuming to get. And you constantly have to follow up on them. And more importantly, they always do the banks that are currently not pull this service from customers in the market.
Yeah, and the problem that you're also sitting with, John, is that you're not always sure as to the relevance of the bank code. I always jokingly say when they give you bank code C, see for yourself. You will, because it's only relevant for 7 days and it's only for a very short period and only a snapshot. But now we sit with the problem. How are we going to solve it? So we put a plan together, didn't we, John?
We did, yes. Yeah.
So what is this plan that we've put together?
So we came up with an Inoxico bank statement analysis. And I think what I want to stress quite significantly in this webinar is the fact that we specifically do not call it an Inoxico bank code. We call it an Inoxico bank statement analysis, and there's good reason for that. The first thing is that we obviously don't want to put ourselves in a position where we are giving or perceived to be giving bank codes out on behalf of banks for their clients. But I think more significantly, the Inoxico bank statement analysis delves a lot more deeper into the analytics of the bank account than purely just coming back with a decision of whether the code is an A, a B, or a C, or a D.
Yeah.
And obviously, the analytics, which is something that we specialize in. Those of you on the line will know that Inoxico is a company that focuses on trade debtor payment and default analytics. And we apply that same philosophy and that same approach in terms of our bank statement analysis.
All right. And those results that we get out of this bank statement analysis, what is it and what is it talking to?
Yeah. So what we look at in a bank statement analysis, and you know, part of your credit vetting process is you look at a whole host of information. You look at credit bureau reports, you look at information that you have on the customer, you get your bank code, you may or may not assess financial statements if you've got them. You know, a bank code is a measure of comfort, as Martin rightly points out. But our bank statement analysis actually goes one level deeper, or goes a couple of levels deeper. So what we look at when we analyze a bank statement is we look at a couple of things. We look at the inflow of funds into the account. So what money is coming into the account? What is the amount of money coming into the account? How often does it come into the account? Also, when does the money come into the account? So our analytics takes into consideration a lot of content, a lot of data around the inflow of funds into the bank account. What we then also look at is we look at the outflow of funds on the account. And similarly, what are the amounts of the outflows? What are the timing of the outflows? How frequent are the outflows? So you get a very good position when you're analyzing bank statements. You get a very good understanding of what the net cash position of a customer looks like in that particular bank account. And what we need to point out is that, you know, companies have multiple bank accounts. So it's quite important and critical that the bank statement analysis that we're doing for you is relative to the bank account that is going to make the payment for the credit that you're in fact granting to that particular customer.
And you don't make this analysis over a 1 month bank statement. You probably take a couple of months into consideration when you do
so you know, coming back to the point of multiple bank accounts, we look our analysis requirement is that we are looking at the transactional bank account that the company is using. It mustn't be a call account or a deposit account or a money market account that shows an outstandingly favorable cash position with no transactional activity. So we look at bank statement analysis. Typically what we look for is 3 months of bank statements. We look at 3 months of bank statements that are consecutive, 3 months of bank statements that are current, because we think over a quarter you would get a pretty good synopsis of what the inflows and outflows of the cash flow of that position look like. There are other factors that we also consider. You know, once we have an understanding of the inflows and the outflows, we get a good sense for what the net cash position of the company is.
Of course, and that's critical because I want to know, is this going to pay me or not?
Yeah. So the net cash position is what we look at to inform, firstly, the amount of your inquiry and the terms of your inquiry.
Yeah.
So does the company have the available net cash in the bank account to make that payment to you? What we also consider is, you know, if you look at a lot of very small and micro businesses, you'll see situations when money flows into an account over month end. Money then flows out of the account sort of immediately once the money's flowed in, and there's very little residual money available in the account to make the payment to you. So these are factors that we look at quite carefully. So it's not just the inflows and outflows, it's the net cash position and the duration of the net cash position and whether that net cash is sufficient to meet the payment that you're looking for.
So you tell me you're looking at when is the money coming, how much money comes in, when is the money going out, how much money is going out, when this dude has money to pay me.
Correct. Correct.
Jeez, okay, that's a lot of information.
It is.
So no, it's not just code A, B, or C.
Yes.
You're giving me a lot of information.
Yeah.
So let's say that I wanted a bank code for R1 million. And after you've assessed all of this, and it doesn't look like this guy going to meet this million, what do you tell me then, John?
So what we do is we try to keep the phraseology consistent with the terminology and the phraseology that you've been accustomed to over the years. So we would give you, in this particular case, either code E, where we think the figures are considered too high. If there's insufficient information analysis to make any informed opinion, we would tell you it's an Inoxico bank statement F, where we don't have any meaningful financial information. But what we try and do for you, and understand that our sort of core focus is enabling trade credit, assisting our clients to do business with the right customers at the right level of credit, so that it's trade credit that is profitable, that reduces the overall cost of credit of the business, and reduces the profitability and improves the, so not reduces, improves the profitability of the business. So in the case, for example, of a bank code for R1 million, if we were unable to speak to it, we would look at the analysis to say what amount, what level of credit can this business afford to make the payment to you within the terms that you're looking for. So in addition to giving you the code E or the Inoxico analysis of E or F, we would give you some indication of where and at what level we think the customer would be good for the inquiry. So typically we would look for what is the best amount that this company can afford, or this business can afford, where they can trade profitably with your customers. So a likely outcome would probably be that at a level of 250,000 as opposed to $1 million over 30 days, this customer would be a C, and as a C would be an acceptable credit risk to you. So we give you that alternative to say, R1 million is not an option. We need a lot more information, and we would ask you, are you able to obtain financial statements on the business or additional information to enable us to assess the million? But in the interim, we think the customer is good for a level of 250,000.
So you mean your code C doesn't say to me, see to yourself, you've already looked and you're telling me, you're giving me the facts.
Yeah, I think that's an important point, Martin, is that, bank statement analysis, when you're looking at a bank statement analysis, it gives you a view into the financial cash position of the business. And by overlaying that with Inoxico's data analytics, I think that the outputs that we produce are very powerful indicators of whether that business is good for the inquiry amount that we recommend.
So if I'm now one of your clients, John, what do I need to give you to enable you to do this for me?
So typically what we would need is we would need 3 months of consecutive bank statements. It would need to be on the company that you are granting the credit to. The statements need to be consecutive. They need to be transactional in nature. So typically what we would look for is a statement with more than 15 transactions in a month.
And in what format must I give it to you?
Our preference is for a true ID sort of data format, because I think what's critical here is we want to be able to respond to you as our customer in the shortest turnaround time. So it's far easier for us to read data into our models and interpret the data and give you a quick turnaround time, as opposed to scanned PDF versions of bank statements, which we then have to either capture or put through our character reader to analyze. And that just aggravates the turnaround time. It produces the same output, it goes to the same model, it goes to the same process. But our preference is for data formats that are easily imported into the model, which gives us a very quick turnaround time.
Now, you mentioned just now that the banks have quite the brakes on these bank codes, and they're taking a long time to give them through to us.
Yes.
How fast are you doing this?
Our target is a 30-minute turnaround time, and what we're saying is that is a maximum that we would look for. So you can, if we're getting it in the required format, the turnaround time will be significantly less. And if you compare that to the turnaround times that you are currently receiving from the banks that are giving bank codes at the moment, and if you look back in the archives in terms of the turnaround time for banks historically when they were all giving bank codes, I think that a 30-minute target turnaround time is quite significant.
Yeah. So, in a very short sentence, what do you think is the most important characteristics of our bank statement analysis?
I think the net cash position, which is informing the outcome or the code, I think that is a very powerful analytical tool.
Before we get to the question, how much is it going to cost me? Before we get there, what else do you do with this information? Do you put it somewhere else? Do you reflect it somewhere else?
I think it's a very worthwhile question, because these statements analyses that we do help to inform our trade credit data on our population of clients. So we use it to augment our millions of other credit record, credit information data that we have on customers. We archive this information, and what it does is it gives us, over a period of time, a good payment predictability outcome in terms of bank statement analysis. So the data, it's not just a consumable where you ask us for an amount over a period of time, and we give you an interpretation of what we think the bank statement analysis should be. That information also feeds into our multiple data analytics models to help better inform cash flow predictability of clients and probability of default of clients.
So the question is then always, when do you ask for this, or when do you ask? Okay, I know that it's probably when we do the onboarding process in Fabric, and part of your digitized credit application then specifies that for a certain credit limit, you must upload your bank statements. And once the debtor has uploaded his bank statements, those bank statements will come to us. We will analyze the bank statements. We'll put it into the decision engine that is going to assist with making the decision and taking all these analytical tools that you've spoken about just now and give an outcome to our client through an onboarding process to say, we recommend that this client's account be opened or not. And that takes into consideration the whole process, not just the bank statements that we've analyzed, the outcome of the bank statements, but also our other analytical tools and our other capabilities within our system to this is just one little portion of what we see as a very prominent analytical tool that we use to analyze whether or not the client is good for your amount of inquiry, but not just whether he's good or not. How can we grow him? How can we even go better than what you are currently dealing with, and make futuristic decisions around what it is that you're going to give? Now, John, the old age question about government institutions and municipalities. How do you think it's possible to get real relevant banking information out of these institutions?
Yeah,
I think it's going to be more of an opinion than what is going to be a fact, because we all know that it's extremely difficult because they don't give you balance sheets. So what is it that you're going to get to try and see how these guys are operating?
Yeah, when it comes to sort of government departments and municipalities, the media is pretty fluid in terms of giving information on which municipalities are better run than municipalities that aren't as well run, or state businesses. A lot of them, like your state-owned companies, they are required to produce audited financial statements, which they do through the Auditor General. A lot of this information is publicly available, but there are also reports in the media around what is happening in these various municipalities. in these various state-owned institutions. So there is data out there that could assist you making decisions. I somehow doubt that you would get bank statements on a municipality. And certainly the bank statements on the municipality would be sweeping accounts where we all pay our rates and taxes into them. And it would be quite an interesting analysis to do. But you know, I would say that there's more of a reliance on alternative information sources.
So our predictability of default model analyzing payment behavior of municipalities would probably play a far more prominent role in giving you an answer or whether or not the municipality is capable of paying or not paying.
So if
same with the government.
So if you look at you know, a key component of our data analytics is obviously the trade data payment analysis that we get. So our clients provide us with age analyses on a monthly basis, and a number of our clients deal with these state-owned companies and with these municipalities. So we do get payment information in that format. So it helps considerably when you've got that data and you're able to run analytics on that data to accurately inform the payment profile and the business risk profile of that particular municipality or state-owned business.
Because it's become more and more difficult to get information out of state-owned entities and, of course, municipalities. But it's also, if you can analyze that data and give me a better understanding as to what the predictability is of them paying or not paying, and of course, also your documentation needs to be in order, because I always think that these state-owned entities and municipalities look for a reason rather not to pay you than looking for a reason to pay you. Before we step off the actual format and everything, just to confirm, if someone wants to engage with us to do bank statement analysis, the PDF format is one of the formats that we can use, but we don't want photocopy documents and things like that. Original documents or an engagement directly. You mentioned a format. What is that format? Just repeat that, John.
So we look for true ID data formats, which is quite commonly used in the marketplace. If you look at a company, any business, for argument's sake, even in our personal capacities, when we go on to our online banking and we look at our statement online, we have options to download those statements, either the PDF format or download them in an Excel format. So even that is very useful. If we got the information in an Excel format, it would suffice. I think that, you know, you mentioned photocopies, and that's quite key, because, you know, when we're looking at PDFs or scanned copies, you know, if they've got, you know, comments on them, or if they've got markings on them of any sort, it just
makes it difficult.
It makes it extremely difficult. You know, in those instances, we end up having to capture the data manually.
And that slows down the
process. If it's a 30-page bank statement, you can imagine it takes, and also, you know, you run the risk of missing a note here and there. Because there's no way of checking that you've captured it 100% correctly. So a data format is the way to go. Is obviously the best route to follow.
Now, we're talking all about now bank statements. We're talking about South Africa. You do bank statement analysis on my neighboring territories in Africa and the rest of the world, foreign currency?
It's interesting that you asked that question. I recently did an analysis on a Botswana company. And what you know, I'm someone that has spent some time in Africa. I've just returned from 2 years at Nedbank in Eswatini. So the major banks in South Africa run what they call franchise models up in Africa, in African countries. So the systems are common to South Africa. The information is consistent. So, you know, in the case of the Botswana company, you know, it looked exactly like a standard bank account that I would see in South Africa. The format was similar. I could read the data, I could interpret the data. The pooler is a slightly different exchange rate to the rand, so obviously there was a factor that we needed to consider in terms of converting to local currency. And you know, in answer to your question, it is certainly possible to do bank statement analyses on African countries or other countries.
So if someone is already a client of us, this product is available to them to utilize?
Yes. Okay. So what we recommend to our clients is obviously that you use it as part of our existing platforms and as part of our existing solutions. So typically your client would have a Fabric onboarding application process that would provide for the uploading of the bank statement information. That would normally feed into our decision engine process. And the bank statement analysis would produce an output, but it would also inform the decision with regard to whether or not to grant the credit.
Okay, so now we've looked at where the information comes from. We've looked at what you do with it. We looked at how you recommend on whatever our inquiry amount is. We looked at what you're going to do if you don't get bank statement analysis, what other information you can use to make these decisions on, because it becomes complex these days, because trade references aren't relevant anymore. So probability of default and bank statement analysis and those kind of things are now more and more going to play a prominent role in the way that our clients make very critical decisions on how to engage with someone that they give credit to. The very important question is, how much is this going to cost me, John?
Yeah, I think before we address the cost, I just want to reiterate the point that you've made, is that the information that we've relied on traditionally from a credit vetting perspective, like bank codes, like trade references, are going to become, you know, less and less. And we have to progress, and we have to, you know, transition to more sort of current forms of analytics. And we've talked about our rich data sources. We've talked about the comprehensiveness of our data, how we use the data, and how we apply the data. And you know, when it comes to cost, I think what we also need to consider is the fact that we are able to do this and these analytics using the rich sources of data that we've got, which have been aggregated across our entire population of data, and that also considers the profile of this particular company, your particular company that you are granting credit to, against the population of similar companies. It is becoming, or it is certainly a far more powerful predictor of payment probability or payment default. When it comes to the cost, you know, obviously the cost is embedded in the products that we currently, the solutions that we currently provide our customers. You know, to answer the question more directly, you know, every customer has a specific need in terms of type of analysis they're looking for, in terms of volumes of analysis that they're looking for, and you know, these are priced accordingly for those.
So best they speak to one of our consultants specifically.
But you know, in a nutshell, you know, the cost would be part of our existing solutions. But you know, if you were to break it down into compartmental components, it would never cost more than what you're currently paying for a bank code.
Yeah.
With your bank that you've been getting traditionally. And again, it's volumes based. You know, if you are only applying for 5 bank codes a month with your bank, through your bank, it would have a certain price. If you were applying for 500 bank codes, it would be at a significantly cheaper rate.
Of course.
So our solutions are also priced based on the need of the client and the demand that they're looking for.
There's always this one question. I know you alluded to the bank codes being similar in reference, bank code A, B, and C. Now, we know you and I come from an era where we used to write out checks. And then there was things like refer to drawer, RD checks. Now, that, of course, doesn't happen anymore because it is now,
checks,
it's now digital. But those things are also not met. Do you reflect if things like that is picked up in the bank statements? Do you reflect that some of these debits have been returned or has not been met?
Yeah. Now, certainly, as you point out rightly, checks are a thing of the past.
Yeah.
And if I'm going onto my online banking profile and I'm trying to make a payment and I don't have the funds available, it won't allow me to make that payment. But to go one step further, companies may have debit orders with finance companies and the like. These get processed through the bank account. And what our analysis picks up is obviously the debit went through, but the debit immediately went out as an unpaid item. So the analysis that we do, remember we talked about the inflow of funds into the account and the outflow of funds into the account. We're not necessarily specifically speaking to the RD or the returned item on the account, but what the impact of that return is, it reduces the cash of the net cash position of the business. And more importantly, it computes with the outflow of funds against the lack of inflow of funds. So RD specifically, checks being discontinued is something that you're not going to see going forward, even if you were to get bank codes from your bank. But certainly our Inoxico bank statement analysis does take into account the fact that these returned items, where they are evident, are factored into the analysis.
So your code G and your code H, which refers to dishonored papers, are going to become less and less utilized. And reflected. So you will almost stop at a code F. Because that is going to talk about the financial status and the financial position of the business. Okay, let's summarize all of this that we've just said, John. So we can do bank statement analysis and give our clients a far more reflective position in a code as to the capabilities of this specific debtor to pay or not to pay. And if they ask for a specific amount and we feel that they can't meet that amount due to the cash inflow and outflow, we'll give them some alternative. All right. So that already in a nutshell gives me far more information than what the old bank codes used to do. Secondly, this information can help me, if I utilize some of the other tools in Inoxico, to further support my analytics in the capability of the debtor paying me or not paying me. However, if this information is not available, like we just discussed, municipalities and government organizations, our analytical tools that tells you the probability of default of this debtor could start talking to the capability of these organizations being capable or not capable to meet your required needs or meet your required payments. But of course, all of this depends on the volume of information that we receive in payment history or your aging information regarding or around these debtors that we're talking about. We can do foreign debtors. We can do it in foreign currency. We convert the currency. So this is a very powerful bit of tool that we've got here, John.
It certainly is,
And it adds huge value to our support that we want to give our clients in how to grow your client.
I think that's quite a pertinent comment that we need to just focus on for a little bit. We talked earlier about the fact that where you have applied for R1 million, and we're not able to comment, but we can give you a comment for 250,000. In line with our sort of value promise to the market to help them grow their trade credit profitably. If we've got a code C on R1 million, let's say a code C on 250,000, or Inoxico code of C on 250,000, we would also, look at what level does the client become a B? So we'd say, we would look at, level up as well as a level down. So what level, if you went slightly less, would there be a bank code a B in this particular example? So we look at opportunities. If you are applying for an amount, can you grow this client? Can you give more credit to this client? So they might be good for 250,000, but they might also be good for 350,000. And that's the kind of feedback that we give you. And it's not just the output of the letter. the A, B, or the C. We give you a descriptor around that. So that it gives you some context as to why we consider this to be a satisfactory client or a good client.
And you alluded to the word, we're an analytical business.
Certainly.
Yeah. So we're stepping away from this traditional credit bureau activity where it's a bank code and 3 trade references. And so we say that even if a bank statement is not available, even if the balance sheets are not available, we analyze the payment capabilities in aging information of this debtor. By doing that, we predict whether or not he's going to be a good payer or a bad payer. And by looking at that, those volumes of input and how he responds to what his terms are that these suppliers have granted him, how he's paid according to those terms, how he's utilized his credit limit, how often has he exceeded his credit limit, how often has he exceeded his terms, not just with one debtor, but with a multiple set of suppliers to him. That analytics starts talking powerfully about the capability of a debtor being able to pay you or not. I heard the description the other day when someone says to you and they start describing someone and he looks like Usain Bolt.
Yeah.
And you say, can this oak run the 100 meters faster than 10 seconds? By the description, you think, yes, he possibly can. So if a business is described in a certain way and acts in a certain way, the possibility that that business could be a good payer without looking at bank statement information is very good.
Correct.
But you need to understand the makeup of that business to make that analysis to be able to predict that. Correct. And that is what we at Inoxico are doing right now.
Yes. So as you point out, we aggregate the data, the data sources that we have, and we look at what are similar profiles of businesses to not just your company, but similar types of companies in similar industries. How does your client's payment behavior reflect against those aggregated payment behaviors? And that's what drives the power of our analytics and our analytics and our scores and our outputs that we produce.
Now, the question is always, can this be added to our other tools? Now, I know the answer. The answer is yes, that is there. So the minute we've done an analysis or a bank statement analysis for a client, that information is immediately absorbed into the analytics that we do. So if a client is using our onboarding tool and it goes through the decision engine, someone else has asked for a bank statement and got that information. So that information is now residing somewhere in core.
Correct.
So now when you come and you want to do an analysis, it's going to go look at that information. It's going to help making the decision in the decision engine, and it's going to give you an answer. Or this information is also stored on core and it is there available for someone else to look at. Is that true?
That's 100% true. Our data sources are almost real time.
Yeah.
As information is being received, as information is being updated, it's fed into the database and it's been factored into any decision that's been taken on a particular data. And if you go into our database, those of you that have got access, you will see, each piece of data has a date and timestamp on it.
Yeah.
And you can see when it was updated. If you look at our large corporate clients, we are interacting with their debtors system on a daily basis.
So it's real-time analytics.
Correct. We're getting daily feeds from these top corporate clients, which we are putting into our database, interrogating the information, the data as we receive it, and using it to enhance the decision outcomes that we produce as a result.
I think the most critical question would be, do you have analytics? So that you've never done a research on any client. So basic information is there, your subsidiary information, your statutory information, your court information, and of course the information from SARS. But you've never done a research and you haven't got a bank code and you haven't got bank statement analysis. This analytics that we're talking about, where we have other businesses' data that they supply us on a constant basis, is what our predictability
Is
and
based on.
our
Correct.
futuristic view of the data is going to view, analyze, and give you a possibility of being a good payer or being able to meet your requirements or not.
That definitely, yeah.
Yeah.
That certainly is the case.
Of course, the statements can be sent directly to us. That doesn't have to go via our client.
Correct.
They can come directly to us as long as we know who we're going to do it for. Because it doesn't help we get these bank statements and we analyze them and we now think, who must we send this to? Very important for if one of our clients ask one of their debtors to send bank statements to us to analyze, because I think clients will be more freely giving it to us than what they would give it to
their supplier.
Correct.
Correct. Yeah.
So they'll give it to us. Yes, they can send it directly to us as long as it's in the format that we can read.
Correct.
They can send it directly to us so that we know who it's relevant for. So once we've done the analytics, that we can share that information with the relevant client.
Yes.
All right. Okay, John, I think we've now threshed this beautiful set of information or tool that we've got in assisting our clients with this gap that the banks have now all of a sudden left, and an opportunity for us to help our clients grow their clients.
Correct.
Grow with their clients. Want something to help you, bank statement analysis, or if the bank statements you can't obtain, like we've spoken about, there are various other sets of information that we at Inoxico use to analyze your debtor's capability and give you a probability of payment outcome to support you in the decision making around your debtor, whether to grow your debtor, which is what you would like to do, or maintain if there's a certain amount of risk, or decrease your risk if there's a certain amount of more risk relevant to your debtor. If you have any more questions and you haven't posted them to us during this discussion, and you would like to ask us these questions and don't want to do it now, when we're going to give you an opportunity to ask questions, please feel free. You have our detail, you have Fatima's detail, we invited you to this discussion. Please share them with us. John or I, or both of us, will come back to you as quick as possible. If you want to engage with us a little bit more around the analytical part of our business and what is it that we look at and how we give you that information back to assist you in making credit limit decisions, please feel free to contact us and we will get one of our marketeers to speak with you, give you information, give you assistance, and help you to interact with us and make better quantified decisions around the risk in your specific debtors ledger. Any questions? I've got a whole flow of questions. Hopefully I've answered most of them, or John has answered most of them. The ones that were sent to us, we've spoken about it. But if there's anything more, don't hesitate. Send them through to us. Otherwise, from John and I, thank you very much for your time. Thank you for listening. And we hope we've given you some food for thought and some valuable input into how to increase your capability to manage your data and grow your business faster and better through Inoxico. Thank you for your time. Have a super day.
Thank you, everybody.